Disclaimer: this report is for informational purposes only. And does not constitute legal, financial, or medical. Disclaimer: this report is for informational purposes only and does not constitute legal, financial, or medical advice. All news stories are presented as factual events. None should be considered professional advice in any of these domains. Daily News Report, February 25, 2026. 1. Trump delivers marathon State of the Union address. Washington, D.C., President Donald Trump gave a record-length State of the Union speech, proclaiming that we're winning so much and outlining what he called a booming U.S. economy. His address stretched beyond 100 minutes, breaking his previous record, as he listed accomplishments in job creation and manufacturing growth at home while touting a new world order abroad. With an eye on the upcoming midterm elections, the president aimed to convince Americans that the economy is stronger than many believe, despite his slumping approval ratings. Morningsun.net, Morningsun.net, Morningsun.net. Trump interwove policy points with patriotic flourishes and surprises. He honored a freed political prisoner from Venezuela, U.S. military heroes, and even welcomed the Olympic gold medal-winning U.S. men's hockey team as special guests in the House chamber. These moments drew bipartisan standing ovations. At one point, Trump joked it was the first time he'd seen Democrats rise to applaud during his speeches. The president used these emotional highlights to call for unity, even as he later took partisan swipes at Democrats, accusing them of hindering progress. Morningsun.net. Analysts note a contrast between Trump's upbeat economic portrayal and public sentiment. The president insisted that soaring prices were tamed and celebrated the rising stock market as evidence that millions and millions of Americans are all gaining. However, polls show many Americans remain anxious about their finances, feeling they haven't benefited equally from recent growth. Trump's tone also shifted sharply mid-speech. After calls for bipartisanship, he pivoted to a darker turn, ridiculing Democratic lawmakers on issues from immigration to crime. The speech, delivered before a joint session of Congress, highlighted Trump's 2026 agenda and set the stage for fierce partisan debates in the months leading to November's elections. Morningsun.net. Stock market impact. President Trump's address and related policy moves had an immediate if mixed effect on financial markets. On the eve of the speech, he signaled plans to raise tariffs on trading partners, a move that rattled Wall Street. On Monday, the Dow Jones Industrial Average plunged 821 points, tilde operator 1.66%, as investors reacted to heightened trade uncertainty and fears of technology disruptions. Major indices like the S&P 500 and Nasdaq also fell over 1% in that session. Tech stocks were hit particularly hard. For example, IBM's shares tumbled 13% after Anthropic, an AI firm, announced new AI coding capabilities, underscoring how geopolitical and tech news can intertwine. On a positive note, Trump used the speech to emphasize economic optimism, pointing to lower gas and mortgage rates, and some defensive sectors did outperform amid the volatility, with consumer staples like Walmart and Procter & Gamble rising over 2% as investors sought safety. Financial analysts downplayed the long-term impact of the tariff hike, arguing a 15% global tariff rate is unlikely to have a meaningful impact on economic activity. Nonetheless, markets are bracing for continued trade-related swings, and experts warn that if U.S.China and U.S.Canada tariff tensions escalate, further stock volatility could lie ahead. CNBC.com, CNBC.com, CNBC.com. 2. Savannah Guthrie offers $1 million reward for missing mother. New York/Tucson, Arizona, Savannah Guthrie, co-anchor of NBC's Today Show, made an emotional plea as her family offered a $1 million reward for information on the whereabouts of her mother, Nancy Guthrie. The 84-year-old Nancy disappeared from her suburban Tucson home on January 31 and has now been missing for over 3 weeks. Speaking through social media and on Today, Savannah said they're holding out for a miracle even as she acknowledged the painful possibility that her mother may already be gone, dancing in heaven. Morningsun.net. Authorities suspect kidnapping in the case. Home surveillance footage captured a masked man outside Nancy Guthrie's door on the night she vanished. Investigators later found drops of blood on the front porch, intensifying fears for Nancy's safety. The FBI has been assisting local police. Given Nancy's urgent medical needs, she requires vital daily medication, heightening the family's worry. So far, few leads have been made public, but the substantial reward has prompted a flood of tips. Law enforcement is sifting through submissions, urging anyone with credible information to come forward and help bring Savannah's mother home safely. Morningsun.net. The case has drawn nationwide attention and outpourings of support. Viewers of Today and people across the country have been following updates closely, which in turn boosted the morning show's audience. During the first week of February, Today saw a viewership jump to 3.3 million, up 23% from a year ago, as the search for Nancy became a major story. While colleagues and fans offer prayers and volunteer for search efforts in Arizona, Savannah Guthrie has continued to host Today, often visibly emotional. She thanked the public and her media peers for keeping hope alive and said her family remains determined to find answers. NBC News indicates it will maintain focus on the story until there is a resolution. TheWrap.com. Stock market impact. The human interest nature of this story had minimal direct effect on financial markets, but it did coincide with notable media trends. The surge in Today Show ratings demonstrates public engagement with the story, which is a positive sign for NBC Universal, owned by Comcast. However, Comcast stock, Nasdaq CMCSA, did not show any unusual movement specifically tied to this development. Investors typically focus on broader business drivers, for example, NBC Universal's recent record-breaking viewership from the Super Bowl and Winter Olympics in February, which significantly boosted advertising revenue and streaming subscriptions. Such major events, rather than tragic personal stories, tend to influence a media company's stock performance. Overall, while the nation remains concerned for the Guthrie family, markets view this situation as a news story, not a factor impacting NBC's financial outlook. TheWrap.com. 3. House rejects post-collision aircraft safety bill. Washington, D.C., a bill to mandate new aircraft collision avoidance technology, introduced after a deadly mid-air crash last year, failed to pass in the U.S. House of Representatives. On Tuesday, the Rotor Act, which required installing advanced ADS-B and locator systems on all aircraft near busy airports, fell short of the supermajority needed under a fast-track process. The vote was 264 in favor versus 133 against, just shy of the two-thirds threshold for approval. The bill had already cleared the Senate, spurred by a tragic January 2025 collision between an American Airlines jet and an Army Black Hawk helicopter near Washington, D.C., which killed 67 people. PBS.org, USNews.com. The National Transportation Safety Board, NTSB, has pushed for ADS-B in collision warning systems since 2008. These systems would let pilots see nearby air traffic locations in real time, beyond the existing ADS-B out transmitters that broadcast a plane's own position. Safety advocates, including the families of last year's victims, lobbied intensely for the mandate. A number of victims' relatives attended the House vote, hoping for action. However, powerful groups opposed the bill, including airline industry representatives, private aviation groups, and even the military, which raised cost and implementation concerns. They backed a competing House proposal that addresses broader aviation safety issues but stops short of a strict locator mandate. USNews.com, USNews.com, PBS.org. After the defeat, lawmakers from both parties vowed to continue work on aviation safety. House Transportation Committee leaders plan to advance a more comprehensive bill in the coming weeks that aims to implement many of the 50 NTSB recommendations stemming from the 2025 crash investigation. NTSB Chair Jennifer Homendy has criticized the new House approach as watered down, since it delays requiring specific technology in favor of further study. Still, Senator Ted Cruz, Republican Texas, co-sponsor of the Rotor Act, promised to keep fighting for his bill, noting it had bipartisan Senate support and calling it the clearest and most direct way to avoid mid-air collisions. Family members of the crash victims, while disappointed, say they'll keep pressing Congress for decisive action before another tragedy occurs. PBS.org, USNews.com, USNews.com, USNews.com. Stock market impact. Airline and aerospace stocks saw little immediate reaction to the House vote, as the bill's defeat spares carriers and aircraft operators from imminent new expenses. Major U.S. airlines were generally flat on the day. For instance, American Airlines share price moved only modestly in line with the broader market after the bill failed to pass. Investors seem relieved that airlines won't incur short-term retrofitting costs, a positive for industry margins, but the effect was muted amid larger market forces like interest rate concerns and tech sector volatility. In the long run, if a robust safety mandate eventually becomes law, it could mean significant orders for avionics manufacturers and suppliers of ADS-B and systems. For now, however, the status quo remains, and airline stocks continue to trade on broader factors such as fuel prices, travel demand, and economic conditions rather than legislative developments on safety equipment. Any cost savings from avoiding the mandate are relatively small and already baked into airlines' outlook. CNBC.com. 4. Northeast U.S. Digs out from epic blizzard, braces for more snow. Boston/New York, a massive winter storm pummeled the U.S. Northeast early this week, dumping historic snowfall across several states and paralyzing travel from the mid-Atlantic to New England. The blizzard of 2026 intensified into a rare bomb cyclone, bringing fierce winds and extraordinary snow totals. Parts of New York and Boston got well over a foot of snow, while southern New England was hardest hit. Providence, Rhode Island recorded 37.9 inches, 96 centimeters of snow, its largest storm on record. In New York City, nearly 20 inches blanketed streets, contributing to what is now the city's snowiest winter in over a decade. Gusts topping 80 miles per hour, hurricane force, blasted coastal areas, and by Monday over 644,000 customers lost power as heavy wet snow downed trees and lines across Massachusetts, New Jersey, and beyond. Local10.com, AccuWeather.com, AccuWeather.com, AccuWeather.com. Major cities scrambled to recover. New York deployed 2,300 plows and 3,500 emergency shovelers, a program so popular that the city had to relax hiring rules to sign up more workers at $30 per hour. Crews in Boston and Providence worked around the clock to clear impassable streets and sidewalks, with Rhode Island even enlisting extra snow dump sites to pile the massive drifts. In New York, officials prepared to use giant snow melter hot tubs to liquefy mountains of snow. In a prior storm, these melted 23 million pounds of snow in the city. By Tuesday, some semblance of normalcy returned. Roads and mass transit were gradually reopening, and travel bans, like Rhode Island's, were lifted or downgraded to advisories. Still, hundreds of thousands remained without power in coastal Massachusetts, where full restoration could take days due to severe infrastructure damage. Authorities also warned of another quick-moving storm on the horizon later this week, urging caution as the region's snow-weary residents prepare yet again. Local10.com, 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 AccuWeather.com. The storm's impact was far-reaching. Over 9,000 flights were canceled Sunday and Monday as major airports from Washington, D.C. to Boston shut down operations during whiteout conditions. Air travel is gradually resuming, but airlines are working through a massive backlog. The weather system had deadly consequences as well. At least several fatalities were reported, including 2 people killed by a falling tree in Maryland. AccuWeather experts estimate the total damage and economic loss could reach $34 to $38 billion across the eastern U.S., factoring in everything from cleanup costs to lost business. This storm is the third multi-billion-dollar blizzard of the winter, making the 2025-26 season one of the costliest on record for the country. Emergency officials continue to emphasize that the public stay off roads during cleanup and check on vulnerable neighbors as the mountains of snow slowly yield. AccuWeather.com. Stock market impact. The colossal blizzard had localized economic fallout but limited direct effect on the broader stock market. Airline stocks experienced a minor dip as thousands of flights were grounded. Carriers like Delta, Southwest, and Alaska Airlines canceled all service to hard-hit airports such as New York and Boston, which briefly weighed on their stock prices. However, investors largely anticipated a short-term disruption. By midweek, as flights resumed, airline shares stabilized. Insurance companies may face significant storm-related claims, with an estimated $30+ billion in damages, but these firms build such events into their pricing models. There was no panic sell-off of insurance stocks, though analysts expect fourth-quarter earnings for property insurers and reinsurers to reflect higher catastrophe losses. Meanwhile, home improvement and equipment retailers like Home Depot and generator maker Generac could see a boost in sales as communities rebuild and prepare for future storms, a trend that sometimes lifts these stocks after major weather events. On the commodities front, natural gas prices ticked up modestly as the frigid weather drove heating demand, but oil was largely steady. In summary, the storm's immediate market impacts were sector-specific and short-lived, with the U.S. stock market overall continuing to be driven more by interest rate news and tech earnings than by winter weather. CBSNews.com, AccuWeather.com. 5. Warner Brothers takeover battle intensifies, Paramount UPS bid. New York, a dramatic bidding war for Hollywood giant Warner Brothers Discovery, WBD, escalated on Tuesday. Paramount Global sweetened its hostile takeover offer to $31 per share, aiming to outbid an existing deal Warner's board struck with Netflix. This new all-cash offer, up from Paramount's prior $30 per share bid, values WBD at roughly $85 billion and has forced Warner's board to reconsider its earlier agreement to sell key assets to Netflix for $27.75 per share. We received a revised proposal, which could reasonably be expected to lead to a superior offer, Warner's board announced, referring to Paramount's enriched terms. Under the Netflix deal, announced in December, WBD would sell its film and TV studios and HBO streaming business to Netflix, whereas Paramount seeks to buy all of WBD, including its TV networks like CNN, Discovery Channel, and Warner Brothers Studio, outright. Thehindabu, Sline.com, CNBC.com, CNBC.com, Thehindabu, Sline.com, Thehindabu, Sline.com. The power struggle has significant implications for the media landscape. If either deal succeeds, it would consolidate major content assets under a new owner, combining some of the world's biggest film studios and streaming platforms. Netflix's bid targets WBD's content library and streaming operations, while leaving aside cable channels, but Paramount, bolstered by a recent merger with Skydance, wants the entire company, from HBO Max to CNN. Warner's board has so far stood by the Netflix agreement, but after reopening talks with Paramount under a one-week waiver, the board acknowledged Paramount's $31 offer may be superior under deal definitions. The next step, if Warner formally deems Paramount's bid superior, Netflix will have 4 days to counter or amend its proposal. Thehindabu, Sline.com, Thehindabu, Sline.com, Thehindabu, Sline.com, CNBC.com. Regulatory and political hurdles loom large. A merger of WBD with either Netflix or Paramount would face intense antitrust scrutiny in the US and Europe. Lawmakers and industry groups have already voiced concerns that further media consolidation, whether via a streaming leader like Netflix or a studio-combining merger with Paramount, could reduce competition, lead to job losses, and limit consumer choice. The Justice Department has begun reviewing the situation. Adding intrigue, President Trump weighed in on the issue. He previously suggested he might intervene to support an outcome, due to his ties with a key backer of Paramount's bid, Oracle co-founder Larry Ellison, though he later said regulators would make the final call. With WBD's fate hanging in the balance, Hollywood is bracing for a potential industry earthquake that could reshape control of famous franchises from Harry Potter to DC Comics, depending on which media titan prevails. Thehindabu, Sline.com. Stock market impact, news of the intensifying bidding war sent media stocks swinging. Warner Brothers Discovery stock, WBD, jumped in recent weeks as takeover speculation grew, but on Tuesday its shares hovered around $29, slightly below Paramount's offer price, reflecting some investor caution about regulatory approval. Meanwhile, Netflix NFLX shares ticked up 1.2% in after-hours trading when WBD confirmed receipt of Paramount's higher bid. Investors seem to bet that Netflix might avoid overpaying. If Paramount wins, Netflix would save $4+ billion by not raising its bid, which buoyed its stock modestly. Paramount, PSKY, now backed by Skydance Capital, saw its shares rise about 1.3% on optimism that it could clinch the deal and expand its content empire. The bidding war dynamic, with each offer including hefty breakup fees. Paramount's revised proposal features a $7 billion reverse termination fee to cover regulatory risk, suggests that WBD's shareholders stand to gain either way. However, the fight is not just about price. Antitrust concerns are a wildcard. The uncertainty over regulators' support is one reason WBD's stock hasn't surged to the full $31 value of Paramount's bid. Market analysts note that media mergers often trade at a discount until approved. For now, Wall Street is closely watching for Netflix's response and any signals from regulators, knowing that the outcome will significantly influence the valuations of all companies involved. Benzinga.com, Thehindabu, Sline.com, Thehindabu, Sline.com. 6. Louvre Museum director resigns after jewel heist scandal. Paris, the director of the world-renowned Louvre Museum, Laurence Decars, has stepped down under pressure following a series of security lapses, capped by last October's brazen theft of the French crown jewels. The resignation was accepted by French President Emmanuel Macron, who called it an act of responsibility to restore calm and refocus the museum on improving security and modernization. Decars had faced mounting criticism since the October 2025 heist, in which thieves masquerading as construction workers walked into the Louvre's Galerie d'Apollon in broad daylight and stole 8 pieces of historic jewelry, part of France's crown jewel collection, valued at an estimated €88 million, about $100 million. Morningsun.net, en.wikipedia.org, en.wikipedia.org. The sensational theft was only one of several crises that plagued the Louvre during Decars' tenure. In the past year, the museum has dealt with a mid-February burst pipe that threatened artworks near the Mona Lisa, damaging priceless books. There were also water leaks, and labor unrest boiled over. Staff held wildcat strikes to protest overcrowding and security staffing cuts at the museum. The narrative of chaos intensified as French authorities recently exposed a decade-long ticket fraud scheme within the Louvre that may have cost the institution around €10 million. Critics painted a picture of a museum in turmoil, with opposition politicians and media questioning whether management lapses had made the famed repository of art too vulnerable. Morningsun.net, morningsun.net, en.wikipedia.org. Decars, the first woman to lead the Louvre, appointed in 2021, initially offered to resign immediately after the jewel heist, calling it a terrible failure of security. She stayed on to implement emergency measures, but scrutiny never abated. Investigations into the theft are ongoing. The stolen jewels, including a tiara of Empress Eugenie, remain missing, and preliminary findings revealed glaring security flaws. Only 39% of the Louvre's galleries had CCTV coverage, and some surveillance cameras were pointed the wrong way. French cultural officials have since announced a major overhaul: more guards, better cameras, cybersecurity fixes, and stricter visitor controls. As an interim step, the Apollo Gallery, the heist location, stayed closed for months. Laurence Decars' resignation clears the way for new leadership to enact these changes. The French government and museum board will appoint her successor soon, with a mandate to restore confidence in the museum's security ahead of the summer tourist peak. en.wikipedia.org. Stock market impact. The Louvre's troubles, while dramatic, have little direct impact on financial markets. The museum is a public institution, not a publicly traded company. The €88 million loss of France's crown jewels is an incalculable cultural blow, but it doesn't hit a stock price. That said, some indirect effects bear watching. Tourism and travel companies with exposure to Paris were relieved that museum operations returned to normal shortly after the heist, with no prolonged drop in visitor numbers reported, so stocks of major European travel firms remain steady. The scandal did prompt calls for better security technology, which could benefit private contractors in the security and surveillance industry if the Louvre, and other museums, invest in new systems. But any such contracts would be government-funded and relatively small in scale, so they haven't moved the needle for large defense or tech firms. In essence, this saga is seen as a contained incident. French luxury goods companies, often sensitive to tourism trends, saw no significant stock fluctuation due to the museum's issues. Investors are far more focused on global economic indicators than on museum administration changes. In short, while the Louvre's leadership crisis made headlines, it remains an isolated event in market terms, with no measurable effect on equities. en.wikipedia.org. 7. Ukraine marks 4 years since Russia's full-scale invasion. Kyiv, Ukraine, February 24, 2026 marked a solemn milestone, 4 years since Russia launched its all-out invasion of Ukraine. Ukrainian President Volodymyr Zelensky, in an address to the nation, declared that Russia has not broken Ukrainians despite the immense hardships of war. "We have defended our independence, we have not lost our statehood," Zelensky said, noting that Vladimir Putin has not achieved his goals in Ukraine. The anniversary brought senior European leaders to Kyiv in a show of support. More than a dozen EU officials visited to stand with Ukraine on this grim anniversary and discuss further aid. Morningsun.net. The human and territorial toll of 4 years of war is staggering. Tens of thousands of people have been killed, and millions of Ukrainians have been displaced from their homes. Large swaths of eastern and southern Ukraine remain under Russian occupation, though Ukraine has dramatically slowed Russia's advance. Over the last year of grinding conflict, the superior Russian army managed to seize only an additional 0.79% of Ukrainian territory, according to the Institute for the Study of War. In total, Russia now controls roughly 20% of Ukraine's land, a figure largely unchanged in recent months after Ukrainian counteroffensives reclaimed some ground. Zelensky used the occasion to bolster his people's resolve. "He has not won this war," he said of Putin, praising Ukrainians' resilience through blackouts, missile barrages, and the ongoing fighting. Morningsun.net. Internationally, the 4-year mark spurred reflections on the war's global impact. Western allies reaffirmed their support, with the United States and Europe prepping new military aid packages, including air defenses and tanks, to help Ukraine through another year of conflict. NATO officials commended Ukraine's courage and indicated the door remains open for future membership, though likely not until hostilities end. In Russia, Putin made a defiant speech earlier in the week, again justifying the war and claiming success in annexed regions, even as sanctions continue to batter the Russian economy. Peace appears elusive for now. Diplomatic overtures have failed to produce a ceasefire, and fighting continues along a 600-mile front line in Ukraine's east. But as Zelensky noted in his speech, Ukraine has survived against long odds. Not broken after 4 years, Ukrainians observed a moment of silence for the fallen, then returned to the work of war, fortifying trenches, training new troops, and bracing for what spring might bring. Stock market impact. The protracted war has become a significant factor in global markets over the past 4 years, though its influence is now largely priced in. In the immediate aftermath of Russia's 2022 invasion, markets saw sharp turbulence, energy and commodity prices spiked, European stocks fell, and defense shares climbed. 4 years on, investors have adjusted. Defense industry stocks in the US and Europe have risen substantially over the war's duration, reflecting increased military spending by NATO governments. Leading arms manufacturers, from America's Lockheed Martin to Europe's BAE Systems, have seen robust order flows for missiles, drones, and tanks destined for Ukraine and for bolstering allied defenses. Those stocks remain near multi-year highs, pricing in continued demand. Energy markets have gradually stabilized since the initial shock of the war's outbreak. Europe successfully reduced its reliance on Russian natural gas by finding alternate suppliers, which helped bring gas prices down from the record highs of 2022. Oil markets, too, have settled into a new equilibrium, with Brent crude currently far below the peak seen in the invasion's early days, when it briefly topped $120 a barrel. Still, the war's shadow persists. Bouts of intense fighting or nuclear rhetoric from the Kremlin can cause short-term spikes in oil and safe haven assets like gold. European equities, especially in countries nearest the conflict, remain sensitive to developments on the battlefield. For example, any sign of escalation or attacks on critical infrastructure can dent market sentiment. Conversely, there is growing investor interest in companies that could participate in Ukraine's eventual reconstruction, engineering firms, construction materials, etc., anticipating a post-war rebuilding boom. In summary, the Ukraine war has become a background factor for markets, deeply influential in certain sectors, but with day-to-day financial news now dominated by other global economic concerns unless the conflict sees a major new escalation. 8. Cartel violence casts shadow on Mexico's 2026 World Cup plans. Guadalajara, Mexico. A surge of drug cartel violence in Mexico is raising alarm about security for the 2026 FIFA World Cup, which the country is co-hosting with the US and Canada. This week, the Mexican military killed Nemesio El Mencho Oseguera Cervantes, the notoriously violent leader of the Jalisco New Generation cartel. El Mencho's death in a raid on February 22 triggered retaliatory mayhem across western Mexico. Cartel gunmen set vehicles ablaze to blockade roads, and gun battles erupted in several states. In Guadalajara, Mexico's second-largest city and a planned World Cup venue, residents witnessed fires and roadblocks as cartel members tried to send a message that they remain a force to be reckoned with. Jalisco's governor activated an emergency code red, suspending public transportation and urging people to shelter at home until order was restored. CBSNews.com, CBSNews.com, CBSNews.com. The violence and chaos directly affected travel and tourism. The U.S. State Department issued urgent security alerts advising Americans in several Mexican states, including Jalisco, to shelter in place and avoid travel due to the unfolding violence. At the popular resort city of Puerto Vallarta, panicked tourists were stuck after cartel blockades cut off roads to the airport, prompting airlines to cancel flights. In total, over 200 flights to the region were canceled or diverted in the days following El Mencho's death. Airlines like Southwest, Delta, and United temporarily suspended service to Puerto Vallarta and Guadalajara amid the unrest. Videos on social media showed billowing smoke over Puerto Vallarta's airport and stranded travelers rushing for scarce available transportation. The disruptions also extended to sports. Mexico's domestic soccer league postponed 4 matches over the weekend because of security concerns. CBSNews.com, CBSNews.com, Yahoo.com, CBSNews.com. With the World Cup just months away in June, officials are trying to allay fears. Guadalajara is slated to host 4 World Cup games, and the Mexican government vows the tournament won't be derailed. Federal authorities announced they will massively reinforce security in host cities, deploying thousands of National Guard troops and coordinating closely with U.S. and Canadian security services. "We will not allow the World Cup to be affected," Mexico's security secretary said, emphasizing that the violence, while serious, will be brought under control well before the event. Some residents like Hugo Perez, a local restaurateur, remain skeptical. "With all the violence, it's not a good idea to host games here," he lamented amid the recent chaos. But as of now, FIFA has not signaled any change in plans, and preparations for the World Cup continue on schedule. The hope is that a sustained security crackdown in the coming weeks will stabilize Jalisco, allowing Mexico to showcase a safe and festive World Cup alongside its North American partners. Morningsun.net, Morningsun.net, Morningsun.net. Stock market impact. The cartel violence and ensuing travel warnings created temporary ripples in travel and leisure stocks, though the market impact appears limited so far. The immediate effect was felt by air carriers and tourism-related businesses. Share prices of airlines with routes to Mexico, like Delta and United, dipped as they canceled flights and briefly halted operations in Jalisco. Hotel chains and travel agencies with a presence in Mexico also saw minor stock weakness, reflecting concerns about tourism disruptions. However, as Mexican authorities moved quickly to quell the violence and flights began resuming within days, those stocks largely recovered. Investors seem to view the unrest as short-term. Market analysts note that the real test will come if security issues linger into the World Cup period, a scenario that could dent tourist inflows and spending. So far, World Cup corporate sponsors, from sportswear companies to beverage giants, have not signaled any change in plans, and their stock prices remain stable. In fact, companies like Visa, a FIFA sponsor, often see a boost from tournament-related spending, and that outlook hasn't changed. If Mexico successfully secures the region, the World Cup could bring a tourism boon that benefits airlines, hotels, and consumer brands, upside that investors would welcome. For now, the market impact of this cartel conflict has been contained, but it's an evolving situation being closely watched by stakeholders and emerging market investors for any signs of prolonged instability. CBSNews.com, Yahoo.com, Yahoo.com. 9. Pentagon pressures AI firm Anthropic over military access. Washington, D.C., a confrontation is brewing between the U.S. Department of Defense and artificial intelligence startup Anthropic, known for its AI chatbot Claude. U.S. Defense Secretary Pete Hegseth has given Anthropic's CEO Dario Amodei an ultimatum: grant the military unrestricted use of your AI technology by this Friday, or risk losing your federal contracts. According to officials familiar with the meeting, Hegseth demanded that Anthropic integrate Claude into a new secure Pentagon AI network without limitations, access that the company has so far resisted on ethical grounds. Anthropic is the last major AI firm not fully on board with the Defense Department's digital network. Rivals, like OpenAI and others, have agreed to partnerships, but Anthropic has expressed concerns about potential misuse of advanced AI in warfare. Morningsun.net CEO Dario Amodei, a former OpenAI executive, has repeatedly voiced ethical reservations. He worries about scenarios like fully autonomous armed drones or AI-driven mass surveillance that could stamp out dissent, according to an essay he published last month. These principles have made Anthropic cautious in dealing with the military. However, Hegseth and defense officials are losing patience. They have floated drastic measures, designating Anthropic as a supply chain risk or even invoking the Defense Production Act to compel the use of its AI. Such steps would be extraordinary, akin to forcing a company to prioritize national security needs. The Pentagon's tough stance, first reported by Axios, underscores the high stakes in the race to harness AI for national security. Hegseth, who has also vowed to root out woke culture in the ranks, frames advanced AI like Claude as essential for U.S. military dominance in analytics and communications. Morningsun.net. The showdown raises larger questions about the role of private AI developers in defense. Other tech firms, including big players like Microsoft and Google, have AI contracts with the Pentagon and have faced employee protests in the past over military uses of their technology. In Anthropic's case, the company must now decide whether to uphold its ethical stance or comply to maintain government business. The Pentagon's deadline and threats put intense pressure on Anthropic's leadership. Some industry observers speculate Anthropic might seek a compromise, such as allowing use of Claude with certain safeguards, to avoid a blacklist. Meanwhile, the AI community is watching closely. This dispute could set a precedent for how far the government can push AI companies to apply cutting-edge tech in warfare, and how companies balance values versus lucrative contracts. Stock market impact. Anthropic is a private company, so it doesn't trade on the stock market, but its clash with the Pentagon sends signals through the tech sector. Notably, Alphabet, Google, which has invested heavily, around $300 million, in Anthropic, could face an indirect impact. If Anthropic refuses the military and loses contracts or support, it might slow the startup's growth and, by extension, affect Google's strategic AI investment, though Alphabet's $1.5+ trillion market cap means any hit would be negligible financially. Conversely, if Anthropic yields or the Pentagon turns elsewhere, competitors like OpenAI, partnered with Microsoft, or IBM could gain government market share in AI. Indeed, IBM's stock recently suffered a notable drop, over 13%, after Anthropic announced new coding AI features, illustrating how competition from advanced startups can sway investor sentiment for established tech firms. News of Hegseth's ultimatum also gave a slight lift to shares of some defense contractors and cloud providers. Traders speculated that if Anthropic is sidelined, companies such as Palantir, which provides AI solutions to the military, or cloud giants with AI offerings might win more Pentagon business. Overall, this situation highlights the growing entanglement of AI technology with government policy. While no immediate market-moving outcome has materialized, tech investors are keenly attuned to any winner or loser that emerges from this standoff. The episode serves as a reminder that government action, from regulation to contract pressure, can quickly alter the landscape for AI-focused companies, which in turn can ripple through the stock prices of their partners and rivals. CNBC.com. 10. Milan Cortina 2026, Winter Olympics close with historic highlights. Verona, Italy. The 2026 Winter Olympics officially concluded with a spectacular closing ceremony in Verona's ancient Roman arena, as Italy celebrated a record-setting games on home soil. The twin Olympic flames in Milan and Cortina d'Ampezzo were extinguished on Sunday, marking the end of 17 days of competition across the most geographically spread-out Winter Games ever. International Olympic Committee President Kirsty Coventry praised organizers for delivering a new kind of Winter Games and setting a very high standard for the future, alluding to the innovative two-city hosting model and Italy's blend of alpine and urban venues. During the pageant-like closing ceremony, themed Beauty in Action, 1,500 athletes were joined by opera singers, ballet dancers, and DJs, showcasing Italian culture from Verdi to techno in a vibrant farewell show. In a moving moment, an 89-year-old Olympic volunteer, dubbed the King of the Volunteers, took center stage to represent the 18,000 volunteers who made the Games possible. The Olympic flag was ceremonially passed to France, which will host the next Winter Games in 2030. AltonaMirror.com, Sports.yahoo.com, Sports.yahoo.com. Athletes delivered historic performances at these games. A total of 116 medal events were contested in 8 sports, across 16 disciplines, including the Olympic debut of ski mountaineering. Host nation Italy achieved its best Winter Olympic result ever with 30 total medals, 10 gold, 6 silver, 14 bronze, shattering the country's previous Winter Games record of 20 medals set in 1994. The United States also had a banner Olympics. Team USA earned 33 medals overall, including 12 golds, the most gold medals ever won by the US in a Winter Games. That performance put Americans second in the overall medal table, behind only Norway, which continued its dominance in cross-country skiing and biathlon. Notably, Eileen Gu of China, the 22-year-old freestyle skiing star, went a perfect 6.46 in her Olympic events after clinching another halfpipe gold, further cementing her legacy. And Johannes Hasflat Klæbo of Norway made history by capturing his 6th gold medal of these games, the most ever by one athlete at a single Winter Olympics, breaking a 46-year record held since 1980. Other highlights included Sweden's Ebba Andersson redeeming herself with a win in the grueling 50 km cross-country race, a U.S. trio grabbing a surprise gold in mixed team aerial skiing, the 11th American gold of the Games, and Finland securing bronze in men's ice hockey for the third straight Olympics. As the curtain fell with a burst of Italian opera and pop music, athletes and spectators alike celebrated a Winter Games that will be remembered for its wide-ranging venues, record viewership, and memorable athletic feats. AltonaMirror.com, Deadline.com. Stock market impact. The Winter Olympics conclusion doesn't just mark a sporting finale, it also has business implications, particularly for media and sponsorship companies. In the US, NBC Universal, parent, Comcast, which held broadcasting rights, saw massive viewership gains during these games. The Milan Cortina Olympics averaged 23.5 million primetime viewers across NBC, Peacock, and other platforms, making it the most watched Winter Games since 2014. This represented a 96% increase in audience over the 2022 Beijing Winter Games, a surge that translates into strong advertising revenues and a successful Olympics for NBC. Comcast stock could get a modest post-games boost as those ad dollars and new Peacock streaming subscriptions flow in. NBC reported 16.7 billion minutes of Olympic content streamed, more than double the streaming of all previous Winter Games combined, showcasing Peacock's growing engagement. Advertisers, from Coca-Cola to Visa, got the exposure they hoped for, which is favorable for those companies' marketing ROI, though any effect on their stock is diffuse and long-term. In host country Italy, the record medal haul and smooth games are expected to bolster national pride and potentially boost tourism in the Italian Alps, but Italian stock indexes were unmoved by the closing ceremony itself. One segment that did see a lift during the Olympics was the sports apparel sector. Companies like Nike and Adidas often enjoy sales bumps during Olympic years, and their stocks have been trending positively with athletes donning high-profile gear, e.g. the U.S. team's popular Ralph Lauren design outfits. Overall, the immediate financial impacts of the Olympics are largely concentrated in media and advertising. With the Games now over, investors will turn their attention to how networks leverage this momentum, for example, disclosure of NBC's Olympic advertising revenue, and any Olympic-related subscriber growth in Comcast's next earnings could become a talking point for analysts. In summary, Olympic fever delivered a win for broadcasters and sponsors, but broader market movement will depend on how those gains contribute to companies' bottom lines in the coming quarters. Deadline.com. Video description, YouTube style. Stay informed with our daily news.